All right, welcome out to today's advisory report. It is May 19th, 2026. We are looking at the intermediate trend as we will normally do when we do these videos. Noticing a couple of things here is that the market is still very strongly above the 30-week moving average. We'll continue bullish as long as the market stays in that position. And as you can see through history, those are usually very good runs in the market marked by the green line, and typical bearish biasness will be when price is below the 30-week moving average. And those are marked in red. Here's COVID, here's 2022, here's tariff tantrum, and here is the recent Iranian conflict pullback. So one thing to note is just because price is over the 30-week and or under doesn't mean that we are not playing any defense in these uptrends, and doesn't mean that we won't start our offense before that period of time. This is just going to be the overall general sentiment of how we feel about the market. Let's jump over to the short-term S&P 500. As you can see, here is the low March 30th, and we've had a very strong incline. When you have a candlestick, this is 1 day's worth of information from the market, 1 day's price action. When you have a white candlestick, that is a day where the market opened lower and ended stronger. That's generally considered a short-term, bullish kind of outlook. So very little days of the opposite, where the market opened higher and closed lower. Now we are in a short-term pullback is what I'd call it, from an obvious pullback spot where the market was about 7% over the 50-day moving average, which is the last 50 days average price. That's this red line. And that usually gets us to the mentality that we are overextended, overheating, and we are likely to have a pullback. So from our angle, we would say that this was very likely. And so we're going to look really for a first spot to really kind of maybe transition the short-term thinking from offense to defense when we cut below this 20-day moving average. That's one spot. Another spot is where these were previous highs. We would call this area resistance. And if price cuts below that, we would say it broke support. So resistance turns into support. Same here, where we had some support, we would expect more support. And then the 50-day moving average is also going to continue to rise. So there are 3 or 4 areas. What our plan of action most likely would be is when price cuts below those areas, depending on how it does it and when it does it and what manner it's positioned. But from a general sense, those would be all areas where we would likely play a little bit more defense. All those areas are really above this biased 30-week moving average area. So those all lie in this area right here. So our strategies, once again, performed very in line with the market and the benchmarks, as we are pretty much just risked the same as the S&P 500 for the aggressive strategies and the other benchmarks too. So that's what I got for you today. We'll be back at it tomorrow. Take care. Have a wonderful evening.